The theme of this year's IFA Galaxy is mentioned as Elevate, Educate, and Excel. So I thought, what are the three things that I can talk about today, which can touch upon this core constructs of Elevate, Educate, and Excel. All of us are, of course, very happy and proud that mutual fund industry has delivered fantastic returns over the last 2 or 3 decades, and investors have really made wealth and money over time. And mutual funds continue to be very dependable and well-regulated vehicle when compared to many other vehicles for various class of investors, not only very small retail investors, but even high net worth clients. Mutual funds have been very useful for them. Having said that, I think MF ecosystem is facing few issues, and I would like to touch upon those few issues and possibly what are the things that we can do. The 3 issues that I think which will be very important out there is, one is the industry structure of the manufacturers, distributor structure. Second is the quality of advice or distributory framework that distribution ecosystem provides. And third is how to invest beyond the narratives. The first is on the industry structure. Investment industry has gone through a proliferation of manufacturers over the last 20 years. When I joined this industry, I joined the first bank-sponsored mutual fund in the country, and later on I joined first private sector mutual fund in the industry. But today we have possibly more than 45 plus mutual fund manufacturers, and the entry barriers have come down. Madam spoke about the fit and proper criteria for choosing mutual fund sponsors, and I would say that over the time we have seen the criteria drop down. And so this has led to a significant increase in competition in the mutual fund industry. I mean, just to give an idea, 1% of GDP mutual fund industry has 46 plus players. And of course, they compete with innumerable number of PMS, AIF manufacturers along the way, and as well as mom and pop shop in terms of stockbrokers. Telecom industry, which is 4.5% of GDP, how many players it has? 2.5, if you count BSNL and Vodafone Idea. And the insurance industry, which has 3% of GDP, has possibly lesser number of players than AMC industry. So clearly, what we are seeing is a proliferation of players, but the challenge is to build scale. Not all of us are able to build scale. Top 8 AMCs account for 70% of the industry's assets and more than 100% of the profits. And I don't see how this is going to change. This is not going to change. So one wonders, of course, do we need such kind of hyper competition in this space? Therefore, what is the role we all play as a manufacturer or you as a distributor? And there is an urgent need to elevate our game. Not all of us cannot be all to everyone. So similarly, all manufacturers cannot be providing all kind of solutions to the investors. We need to find our mojo, as if I can say that word, or niches where we are very strong at, and focus on that instead of trying to be, multiple things to multiple investors. I think that is the single biggest thing I would like to think about. Unless we up our game, I think we would become what I would call it as a victim of consolidation of this industry. I think the recent regulatory initiatives like the special investment funds will actually help in consolidating the industry faster, where we have seen proliferation of PMS and AIFs. Many of them are very light touch regulation segments, and we would see them rapidly consolidate after the introduction of SIFs. The second issue is on the quality of advice. Of course, Indian markets have been very kind to us whether we give good advice or bad advice, most of us have walked away with good returns. I'm not sure whether that will be the situation over the next couple of years. While there is a lot of focus on how a fund is doing, I mean, you have multiple platforms which gives you ratings of funds. Morningstar, Value Research, ICRA, CRISIL, and then people come up with their own proprietary tools on which fund is looking good on last 1 year, last 3 years, last 5 years. So it's been dissected in n number of ways. And then people come up with their curated list of funds that this is good, this is not that great. I think there is not much data available on the quality of advice that is given to the investors by the advisory distributionary ecosystem. While MFDs have done a stellar job of educating their clients, I think there seems to be a long runway of progress ahead. One of the issues that I would like to kind of see come up over the next few years is moving beyond English and Hindi in terms of the communication to our investors. I think focusing on vernacular content is going to spread the knowledge of mutual funds, and we'll be very happy to partner with the various MFDs on spreading the mutual fund message or investment message in the vernacular content. It's an easier way of explaining a very complicated world of investments. So another area of focus is the behavioral management. My previous speaker touched upon that. Markets are moved by emotions, and people tend to stay away, sway between positive and negative perceptions. It is very, very heartening to note that many MFDs, not only IFA Galaxy, many parts of the country, we have seen recently there's been big effort to coaching of distributors and advisors in the behavioral aspects of investing. I think this focus on education is going to be one cornerstone, whether we take vernacular approach to educate, whether we take behavioral approach to educate, is going to be very important. In the immediate future, it's going to be very important to educate to the investors on having realistic return expectations on their investments. I'm sure many of you are facing this big problem of anchoring their investors to a more achievable returns. Clearly, the tendency to extrapolate is very high, especially given the fantastic performance of the market over the last few years. The tendency to extrapolate is very high, and therefore, the immediate future, I think, is to bring down the expectations. India will do well, companies will do well, but it's not necessary that markets are always going to be correlated to it in the short term. If markets run ahead of reality, it will pull back. And that is what I think we are going to see in the next few quarters, if not a year ahead. And therefore, it's going to be a very crucial year for us to traverse. I mean, it is now the advice which we are going to give is going to determine whether we are going to have a happy bunch of investors 3 years down the line or a very, very disgruntled bunch of investors over the next 3 years. I think we are at that crux of that moment. The third, which is the buzzword is Excel, is investing beyond narratives. I mean, one of the things that we manufacturers are at fault is the rapid proliferation of products. And we have complicated the hell out of investing. I mean, the proliferation is not necessarily innovative. I mean, one is to have innovative investment products, another is to have a bunch of keep on launching Me Too products in the industry. And we are going through, unfortunately, this big trend of rapid proliferation of investment products. A case in example is the single factor models. I think many of you may be familiar with the factor investing trend, which is recently caught up globally as well as locally. There are multiple factors, but over the last 3 years, we have seen emergence of low vol 30 fund, growth 25 fund, quality 50 fund, and like that more have come. I call them single factor models, which are well known. it is very clear that they are not going to give consistent returns because the market is a very complex phenomenon of multiple factors simultaneously working together. So, similar example is what we have seen in the recent times, the so-called explosion of thematic funds. I mean, anything that you can't put it in flexi-cap, multi-cap, now we are calling thematic. Defense, manufacturing, resurgent India, as if the other funds are investing in a very less resurgent parts of India, right? No, nobody wants to invest in less resurgent parts of India. Everyone wants to invest in resurgent part of India only. And similarly, new energy, ESG, etc. I would wager today that many of these are going to be very short-term opportunities and will eventually be consolidated along with the bigger funds. There will be a Maha Kumbh Mela of funds, and there will be a big bath, which we all will take. And therefore, why I am saying that, when we say excel, what do we mean? Isn't it better to excel in the existing funds? Shouldn't we aspire to deliver better returns in the existing products or deliver superior service in our existing set of products instead of going on launching? I mean, how many number of investable companies are there in this country? Good investable companies, 300, 350. It is expanding, but it is not expanding at a rocket speed. It is expanding very gently and gradually. And 350, 400 companies are there. Any guess on how many number of open-ended equity and hybrid mutual funds are there till today? No, in India. 8,000 may be there in US, in India. I mean, I last counted. It is like 800, 750 or something, right? I mean, it is easy. Like, there are 45 manufacturers and there are, at least 15 product categories or 20 product categories. You just multiply these two and you'll get 900 products easily. One wonders as to, what's the purpose? I think it's time we focus on how to excel in our existing products and deliver superior returns instead of having plethora of me-too products. Yes, we need to keep innovating. Yes, there is a crying need for a long-short fund in a mutual fund framework. There is a crying need for a reverse index fund in a mutual fund framework, and we can create some variations of it. But my only gripe is that we need to be careful before we complicate the hell out of the situation. I think we need, and with that, I would say that these three pillars of elevate, we as manufacturers have to elevate our game, otherwise we become part of consolidation in a fragmented industry. Educate, we need to educate our investors in vernacular languages. We need to educate them on the behavioral aspects of investing, and we need to educate them to anchor their expectations to a more moderate level. And third is we need to excel. We need to excel in what we are already doing instead of trying to discover newer things. And if we do that, I think we are going to have a great time ahead. I think I'm finishing 6 minutes ahead of my time. Thank you so much.